Welcome to Internal Growth Rate by Dr. Melissa Cohen. Internal growth rate. So the internal growth rate of a company is simply the maximum growth rate that can be achieved with no external financing of any kind. So basically, it's the rate that the firm can maintain with internal financing. So any money, any earnings that they generate, they can basically reinvest it into the company for growth. They don't have to go to an outside entity, a lender, or asking for equity money or anything like that. They basically can use the earnings within the company to fund projects that will help the company grow. So it's the internal growth rate. So once again, it's the maximum growth rate that can be achieved with no external financing of any kind. And so the formula for internal growth rate is simply the return on assets multiplied by B, which is a plowback ratio, divided by 1 minus the return on assets multiplied by B, the plowback ratio. Now here is an example of how to calculate the internal growth rate. So some variables, you'll get a combination of variables on this formula. So for example, in this one, you are given the net income of $80. You are given total assets of $500 and retained earnings as $58. So as you can look and find out, you are not giving the return on assets or the plowback ratio. So those are the two factors that you actually need to calculate the internal growth rate. So let's go ahead and break this down. The first step, number 1, is to calculate the return on assets. And in case you need a refresher, the return on assets is simply the net income divided by total assets. And in this example, we are given $80 as a net income and $500 as a total assets. So we simply divide 80 divided by 500, and that equals 0.16, or you can consider that 16%. Now, step 2 in this example is then we have to calculate our other variable for the internal growth rate formula, which is our plowback ratio B. So with this, you simply take the retained earnings and you divide it by your net income. And that in this example is $58 divided by $80, and that equals 0.725. Or if you convert it to a percentage, it's 72.5%. Now we have the two variables we need to calculate our internal growth rate. And as you see before, the formula for that is return on assets multiplied by the plowback ratio, B, divided by 1 minus the return on assets times B, the plowback ratio. So in this example, I've worked out some of those numbers. Remember, we had calculated the return on assets as 0.16 and the plowback ratio as 0.725. So the first step is, the first line is writing that information out all the way. And the second line is doing some of those calculations. And then our final number, our actual internal growth rate is 0.1312, or converting it to a percentage, it's 13.12%. Now here is a second problem that you may want to work on your own. So in this example, in this practice problem, you are given the return on assets as 14.3% and the plowback ratio as 72%. So what is the internal growth rate? Here's the problem solution. So remember to go back to that original formula here, and I have actually filled in the information. You can follow along here. We have the return on assets is 0.143 times 0.72 divided by the total of 1 minus 0.143 times 0.72. As you can see, we get the numerator as 0.10296 divided by 1 minus 0.10296. That's going to give our internal growth rate as 0.11477, or to convert it to a percentage for simplicity, it's simply 11.48%. Now, once again, let's go ahead and go back and review. So once again, what is the internal growth rate? The internal growth rate is a maximum growth rate that can be achieved with no external financing of any kind. The firm is simply using the money generated within the company to fund future projects. Right, this concludes the internal growth rate concept by Dr. Melissa Cohen.